Hey, badass business owners, I know you want to understand the flow of money through your business, but more importantly, you want to understand profits and how much of it you get to keep and put in your pocket. And you're probably also a little worried because what your business might be showing for profit or what you think you have for profit really isn't what you're seeing in your bank account or anywhere else. So I thought what we do is we would take a look at profit, the flow of money, and break it down just a little bit, because ultimately I want you to understand where your profit is going. And to remember, your profit has 3 jobs. And we're going to talk about all of that today. So the best place to start is, let's just start with the fact that all of the money in your business flows in. And we call that income, revenue, sales, whatever it is you want to call it. It's all the money that goes into your business. And those through the people paying you, okay? Because there's other money that flows in, whether it's your owner's contributions, people you taking out loans and stuff like that. What I'm talking about is the money that comes in through an exchange. You do a service, you provide a product, you do something. So it's the money that comes in through sales. That's going to be your revenue. That's your top line. That's your whole pie, if you will. All right. Then the next thing that happens is we have a saying that you hear me say all the time, right? Sales minus cost of goods minus expenses equals profits. So let's kind of break that down a little bit. So it all starts with sales, just like I said. The next thing is cost of goods, and your cost of goods are going to be all the money that you spend to make or provide the product or service. So if you are providing a product, if you buy a product and you turn around and sell that product, that's a cost of goods. If you buy parts to make a product, it's going to be all the parts or ingredients, materials, whatever it is of the product that you buy. But also there's a caveat on that one, because you have to assemble it. You have to put it together. So you have to include the labor in order to make that product. But if I just buy, let me grab this. If I just buy a pen and sell a pen, there's no labor involved. But if I buy all the parts to the pen, right, and I take these parts and I have to have somebody assemble them, then now I have labor. Same thing. If I sell cupcakes, I go to a store and I resell the cupcake as is, there's no labor. But if I go and make and put all the ingredients together to make a cupcake, and then I turn around and sell the cupcake, now I've got labor involved, right? Now, when it comes to service, same thing. A service means just that someone has to physically do something. So in that case, if I'm installing the pen, I'm going to have the materials, which is the pen itself, and then I'm going to have the labor for me to install the pen. I get it. You don't install a pen. I'm not that dumb, but I just happen to have a pen in my hand, right? It's better than me having a water heater in my hand, because that would be majorly heavy. All right. So if I have a service, maybe I install water heaters, like I was just saying. Maybe I install RO systems. Maybe I do landscaping. Maybe I do irrigation fixes. Maybe I do clean people's pools. Maybe I provide some service to help somebody do something, right? Pick up dog poop, whatever the case may be. So it's going to be whatever materials I have to use plus the labor charges. So most of service is labor, where most of products is actually physical other products. Okay, those are going to be your cost of goods. So if I sell it for $1 and all of my parts and my labor come out to 50 cents, then we know my cost of goods are 50 cents, my sales are $1. Then you have all the other money that you spend on your business, right? So all the other money that you spend is called operational expenses to be able to run the business. This could be advertising, uniforms, stuff to do with your vehicle, insurances, all that other stuff. Everything else gets mixed together into your expenses. So we know we have sales, then we have cost of goods, and then we have expenses, which is everything else. And my goal here isn't to go through and break down every expense and stuff like that. We have other videos for that, and I'll probably do some more in the future. But at the end, we take our sales minus our cost of goods, minus our expenses, and now we have the profit of the business. And this is where things get down and dirty, because let's just say I have $200 of profit or $2,000 worth of profit at the end of the day. That profit has 3 jobs. And one of those jobs I'm going to expand on, because I need to talk about that a lot more, because that's one that keeps biting some people in the butt. So your profit has to go to taxes, retained earnings / debt, which we'll talk about more in a minute, and then owner's draw, which is the piece you get. So if you make $2,000, stop putting $2,000 in your pocket because it's going to bite you in the butt, which is what a lot of people are finding out right now because we are in the middle of tax season and there's a lot of people out there that are like, I didn't make that kind of money. Yeah, you did. You put it all in your pocket and that was your profit. And now you forgot to save for a rainy day, meaning the IRS is knocking because you didn't pay your quarterly taxes and now you owe all of that money. And so when we're looking at profit, if I made, let's just say I'm going to take it to 3,000 because I need easy math. All right. It's still too early in the morning for me. So if we take $3,000 and we know we have 3 jobs, then we've got to say, I need to put some of that money away for taxes. Now you're probably wondering, well, how much should I put away for taxes, Tammy? Well, you're going to be taxed on your profit. Okay. It's going to start with your sales minus your cost of goods minus your expenses. But keep in mind, not every single one of those items is going to be deductible. Your tax person is going to tell you, they might say, look, you're going to take the mileage deduction, so we're not deducting any of this gas or any of these repairs. So don't assume that just because it's on your P&L that it's going to be tax deductible because there might be a better way for you to be able to make that. So if that's the case, that's going to be money that's added back to those profits. So when it comes to taxes, it could be something as low as 10%. It could be you're getting money back. It could be as high as 15, 30%, depending upon your business. Now, the best way to do it is to kind of get a feel from if you had your taxes done last year and you're going to do about the same amount of sales, just find out how much you had to pay last year. It'll give you an idea. Break it into 4, you're going to pay those quarterly taxes. A good rule of thumb is to say, hey, I'm going to put 20, 25% away of my profits into a checking account and just put that money off to the side that I can use for my estimated quarterly taxes. All right. So if I've got $3,000, I might sit there and say, okay, well, I'm going to put $1,000. I'm going to go high. I'm going to put a third of it into my taxes because I know I won't need it all, but at least it's like a backup savings account, if you will. Or I think I'm going to do more in sales this year than I did last year, and I don't want to be short. So you might put 1,000, you might put 800, you might put $500. It doesn't matter as long as you are putting away money for your taxes that you think you are going to owe. So your $3,000 is going to be minus that amount of money. So in our case, we're going to say $1,000. So we're going to slide $1,000 over to our taxes. The next thing that you heard me say was retained earnings / debt. Now, retained earnings is money you reinvest back into the business, right? You're going to leave the money in the business because you either have payroll that you have to pay, so you can't take that money out yet, right? Because you still owe people because we pay in arrears, right? They work and then we pay them, kind of a situation. It could be that your insurance is coming up. It could be that you want to hire somebody. It could be you want to go out and buy a piece of equipment. So retained earnings is money you're leaving in the bank, so that way you can cover expenses that are coming up. But it also covers debt. So if you have a vehicle that you went out and you bought this van for your business and you have $1,000 payment, then you've got to know that that retained earnings has to pay for that debt. So when you have credit card payments, same thing, because you've got to pay the $500 payment every month for your credit card. So that's going to come out of those profits as well, because your credit card doesn't come off your P&L. When you made the charges, it came off your P&L. So when you went to Home Depot and you bought $300 worth of stuff, that's when you took it off for the expenses. But now you're paying it a month later. You don't get to double dip. That's going to come out of your profits. Your profits have to come up with the payment for you to be able to pay that debt. So that's part of those retained earnings. So sometimes retained earnings means it's money you're leaving in the business to grow. Sometimes it means you're putting it into the business because it has to pay the debt of the business. And for some of you, that debt could be pretty high, because if you owe $500 for the credit card and you have $1,000 payment on a van, that's $1,500 out of those profits. And if your profit's only $3,000 and your credit card and your van cost $1,500, there goes half the money. Plus you have to put the money away for the taxes that we just talked about. So you can see how your profit is shrinking every single time that you are doing what you need to do with those profits. Then once you've paid everything, now you know what you can pull out as an owner. But here's the trick. If you are an S Corp or a C Corp, you've already been taking money out through payroll, and that's been hitting your cost of goods or your expenses, depending upon how you have that done. So the profit is going to be that piece that's left. But for those of you that are regular doing business as solopreneurs, single LLCs, and you do not have payroll because you're not allowed to, only S Corps can have payroll and C Corps. So if you're just a regular person who is taking draws, you might have already pulled out money every single week. So for example, if you've been pulling out $500, $1,000 every single month, that's part of those profits. So if you've got $3,000 in profit on paper, but you've already pulled out $2,000, you can see now that you've only left yourself the $1,000 for the taxes and to pay the debt and everything else. Now you're going back into your pocket to be able to pay those expenses. And that's why you feel like you're not making any money, because you've been pulling out money along the way, like a pre-advance, if you will, of your profits, but your profits just did not hit the way that they were supposed to hit. And that is part of where the problem is coming in for you. So I really want to make sure that you understand that it may not be that you're not making profit. The problem is you might be pulling out more money than the profit that you have available to you after you pay your taxes, after you do your retained earnings, after you pay your debt, and then what's left, that's what's yours. So if you've been pulling out along the way, because at the end of the week, you just keep whatever's left, now this is why you're running into a problem, because you haven't prepared properly for the amount of money that you're going to need to cover all these different things. And what tends to happen is people don't put money aside for their taxes, and that's the one that does it, because they're going to pay their credit card, or their credit card is just going to grow and grow and grow. Some of the best bookkeeping, when I've been looking at it, some of the best business owners on this, if their credit cards are $1,000, they pay $1,000. They stay on top of that. So that way it's real time. They know that if I'm going to spend money on my credit card, I'm going to go to Home Depot, Lowe's. The minute I get paid, I'm going to make sure that I pay those credit cards. They stay debt free. And then they know that their profit is true because they're turning around and they're paying it all in the same month and never letting it build up. But there are people whose credit cards have gone from $500, $1,000, $5,000, $10,000, $12,000, and they're all proud of the fact they have a $20,000 limit. Don't be proud of a $20,000 limit. You don't need no $20,000 debt in your business. Now, there is a time and place for debt in your business, but for most of you that are watching me today, you do not need to have debt. You do not need to let your credit cards continue to grow. You spend $1,000 to $2,000 on your credit card and you're making $500 payments because you're looking at your profit going, I need money to live. I can't pay my credit card. You have a spending problem because you're obviously either not priced correctly, or even worse, you're not getting paid by the people for the jobs that you're doing. And there's people out there that are having that problem as well. And I get it. Sometimes people are just jerks and they don't pay you. That's why you got to look at your systems, because if it keeps happening, there might be something that's wrong with the way that you are collecting the money. Different video, different day, but that is part of the problem as well. So once again, this whole thing has been about money that you've got, profit that you have. Why do I not have profit? Why are you telling me and showing me that I've made this profit and I don't have any of the money? It's because you took the money along the way, and or you're spending it on other things because you floated the money for whatever it is that you had to spend, what other debt that you had and whatnot. So really, ideally, the best thing to do would be that you get to your profit, you're able to put money away for your taxes, you're able to pay any retained earnings, put it back in the business, grow the business, or pay the debt that you need to do. And ideally, you've been taking money out along the way, but there's still money left over so you can have some bonus money at the end of the day if everything does right. That's the ideal way that you want to try to look at doing it. But like I said, for some of you, you are taking that money along the way, leaving yourself no money to pay your taxes, no money to pay your debt, no money to retain and grow your business, and yet you still feel like you have no money because you've been taking all the money. I've got somebody that I know that has been making probably $10,000 a month, but it is all going out between stuff they're taking, paying that they don't, debt that they have up to their eyeballs. They're so far behind on anything. They don't feel like they make that kind of money at all. They're just like, oh my God, I just want to make some money. And I'm like, you make $10,000 a month. It's how you're spending it, and it's what you're doing with it. And it's going to continue to snowball until something says, stop. I need to manage this money better. I need to find out where my money's going, how I'm spending it, and I need to make sure that everything is working. And I get it for some of you guys. Part of the problem is you do the job today and you don't get paid for a month because maybe you're doing it for some corporation or some other property manager or whatever the case may be. You might be doing it for some other people and you're kind of behind. So you kind of front the debt in the beginning to be able to do the job, and then you get paid down the line. And if that's the case, then you need to get your business to a point where you can afford the money you have to carry for that business. And it's just money that's always behind, whether that's, $1,000, $5,000, whatever that number is, but you can make sure that going forward, you can pay for every single thing that you do. I know I'm going over a lot of different stuff because I really want people to understand their profit and why they're having all these concerns and issues when it comes to their profit. And that's one of the reasons why I put the course together for people. That's one of the reasons I do coaching and why I do bookkeeping, because I want to help you, the small business owner, really understand where your money's going. Matter of fact, every month when I get done helping people, I give them their profit and loss and I go over. I'm like, look, here's kind of what happened. Here's a snapshot of what's going on. And if I think that people are being dum-dums, I'm going to tell them, hey, you're spending way more money than you really should be. Or why are you not putting money aside for this? Or, hey, reminder, you need an account to put some of those tax monies in. Hey, don't forget, you need to put the tax money away. And I can tell you, some of my favorite folks are the ones that are listening and going, oh, I can see the difference. I know how much money I have. I know what I can take out. Hey, I want to go spend this money to be part of this. Do you think I can do it? And it's like, hey, here's your numbers. What do you think? And then they can make decisions, informed decisions on where their money's going and what's happening. And that's where I want you to be. I want you to be at that place to really understand what's going on. And that's why knowing your business numbers is critical. That's why getting your QuickBooks together, staying on top of that, and knowing the flow of money. So many of you are just running and gunning by the seat of your pants, and you can't keep doing that. You just can't. You've got to understand the flow of money through your business, from the sales revenue side to your cost of goods, what's going out for those expenses, getting to that profit that you've got, knowing exactly what has to go to taxes, at least the general ballpark of what should be going to taxes, how much you want to reinvest back in the business, how much debt you've got to pay, then how much is left over for you to draw, and hopefully you haven't overdrawn yourself with the money that you're taking. You shouldn't have to try to live $500 a week at a time. But for some of you, that is the reality that you're facing. And then you get to the end of the month and there's just no money left over. And it's because you really just don't understand the flow of money through your business. And you're out there busting your butt, working hard, but you have no idea what's going on with your money. And we want to change that. That's the whole reason I do these videos every Sunday. And the whole reason that I put all this content out there and do the podcast and everything else is because I really want something to click inside of your head for you to be able to start saying, my business will no longer own me. I own my business, and I'm going to fully 100% understand the flow of money through my business, where my money's going, what I'm spending it on, and I'm going to stop doing stupid things, because the stupid things that I'm doing are costing me money. And sometimes we got to invest money. We got to put our money back into our business to grow it. I get that. But most of the people that I'm talking to are trying to live off of the money that they're making in their business. And you can't have it both ways. If you have somebody else that's making lots of money in your family and you're able to just throw all the money at the business to grow it, great, fantastic. But that's not the case for a lot of you. For a lot of you, you're trying to support yourself. And for many of you, you're also trying to support your family, and you're working really hard, but you have no clue where your money's going. And when that spouse or that significant other or whatever starts asking you questions, you're like the deer in the headlights because you don't understand the flow of money through your business. I want you to understand the flow of money for your business. That's why you want to make sure you're always here so we can keep talking about it. And sometimes I'm going to sound like a broken record. You might say, Tammy, you just talked about this a few weeks ago or a few months ago. Yep. And I'm going to keep talking about it because you really need to get this through your head that you need to own that business. You need to understand where your money's coming from, where your money's going, all that good jazz. All right. I'm here. I'm team you. I am on your side. And I want you to be a profitable, badass business owner. And that is so important. It's the reason I do this. Okay. Trust me. I don't want to always come over here, but I just say, I can't let you down. I've got to help you make money in your business. And that's why I do this. And with that, I'm going to get out of here because I'm rattling. I'm on a soapbox because I want you to make some money. All right. And with that, I'll talk to you next week. Bye for now.